if you're buying and it's above what the spot price is, you should be paying the people who are short on that side. If it's the opposite way and you're actually selling and it's above the spot price, then the long traders should be paying you. And it kind of stays that way due to open interest and volumes that are going through. There's a few factors that really go into it, but it creates a very different type of a trade where you can be in a spread and you can be paid daily for just holding the trade as long as it stays in your favor. So,
And how has this perpetual percentage spread varied over the years, and how much does liquidity impact that? Has the spread increased or decreased over the years, and what are you seeing in that?
Good question. It has definitely changed over the years, and I would say this: it is really flattened out. So if it's negative or if it's positive, it's a great deal lower than what it was before. Well, a great deal being something that may have paid the short side upwards of, at times I had seen 1% per day, even something really big like Dogecoin or something like that. One of the more well-known bigger coins. But these days, yeah, it's very, very small. You're basically being paid about 3 basis points per day. And although that may be small, at times you can use leverage, and that can go a little bit higher depending on the borrow that you're paying for borrowing the other side of that. But yeah, a lot of market makers have come in over time. In the last few months, the markets have become a little bit more illiquid. Even though they are illiquid, those people that are right there on the front lines, the market makers, pushing these spreads back together, have really kept things in good alignment, basically. So they are not as profitable as they were before. And a lot of people are finding it very hard to execute into these trades and out of them profitably and get around the fees, basically. But they're out there for people who can execute well. They're still good.
I see. So I've heard of this thing called the kimchi premium. What is it? How did it get started? And does it still exist?
Very interesting one. I think it will exist and forever be part of the way things trade out here, just because of the fundamentals of how Korea works in its markets. So one thing that's very key is there's no shorting allowed in the market. So there can't be any short selling.
Why is that?
They just don't allow retail traders to do that. So you have to be of a certain professional level. You have to either be working for a fund and have taken a license and obtained a license to be able to trade that way. And as well, people cannot, or retail traders here, cannot trade any kind of leverage. So leverage is illegal, and shorting is illegal. And because they have their own exchanges and it's based off of Korean won and not kind of stable coins and things like that, people that trade on those exchanges, a great deal of the retail traders don't actually trade on exchanges outside. Now that amount of retail that's trading outside of Korea is definitely growing a great deal year over year. But still, these markets here, without having kind of, the short side selling, it creates a situation where in huge market euphoria, when, basically Bitcoin sees a 30% up week, people on the, people already owning a coin kind of look at the situation and say, do I really want to sell here? And they'll kind of pull their orders. People on the buy side may say, I don't really want to buy here just yet, but let me put in some orders a little bit lower. So you have a very, very big indifference where, the bids are nice and thick, the offers are super thin, and it's just a game of who's willing to wait longer until they kind of ape into things and kind of, basically catch FOMO and just want to buy.
So is this short selling prohibition just for the crypto markets, or does it also exist in the equity markets in Korea? And what's their rationale for that? I mean, were there small investors that got burned from this? And is that why they implemented this regulation?
Yeah, it actually exists in the normal markets. I mean, just everything out here. There is not short selling, maybe in the FX markets, but then again, no one really does FX out here. I kind of goes back to the history here in Korea of what happened in the 1998 situation where markets just tanked and so many people lost so much money. There was just over leveraging, basically, well, too many loans going out and just not being paid back. And after that situation and so many people losing such large amounts of money, I think it was at that time that the government said, we're going to put a stop to this and not offer any kind of short selling. We're going to get rid of short selling so that, these situations don't get even worse, where people look at a situation that's already bad and say, I'm going to make money from this. We're just not going to allow that. But then again, at the same time, it just makes markets unhealthy. We need both sides, really. There's a lot of different types of traders out there, and we kind of need all of them doing their own thing, participating together. And then we have a little bit more of a liquid market and a little bit more of a structured market. So yeah, some of the other markets can also get a little bit wild like that. You can see some real big spikes and some small stocks.
Right. And how does this impact you and the strategies that you're doing?
So one thing is, even still being a foreigner out here, again, I'm not allowed to trade on these Korean exchanges for cryptos. How can I say this? You are allowed as a foreigner, but you can't take your money back off, basically. So you can send coins into the exchange. You can trade those coins back and forth, but when you go to get out, they won't let you take the money back. So, I mean, it's a classic situation where SBF, Sam Bankman-Fried, heard about the kimchi premium and decided, I want to capture this, and found the regulation and basically the situation out here was so anti-foreigner that he wasn't able to do that kimchi premium here, and he moved over to Japan and traded for a 10% premium, whereas at the time it was between 30 to 50 here in Korea. Still, a 10% is a great premium to capture if it's available. But yeah, it's just really hard for any foreigners to do any kinds of trades out here. I've known of other friends that have had to go through other Korean friends to do trades. And then again, the exchanges will often just stop you from pulling your money off the exchange and hold your funds for quite a while.
Oh, wow. How I like to transition to regulations, and I'm curious, how has the Korean government's attitude toward crypto varied over the years, and have they created clear regulations which attract crypto investment and development in the country?
Well, it was definitely just an open free-for-all for many years in the beginnings of crypto. And then at one point, they really started to clamp down. I think the biggest change was there was just so many different crypto exchanges that were being offered to basically the retail environment out here. They were listing all kinds of different coins, and I think several people got burned here or there on trading in these kind of wild crypto illiquid markets. And the government finally stepped in and said, we're banning this and that exchange, and we're getting rid of things as of today. And a bunch of them went under, and only a handful of them survived. And the handful of them that survived have completely thrived. They're doing really well now. Things like Upbit or BitThumb, you can look at their daily volumes, and they're on par with some of the biggest exchanges around the world. And again, they're really only trading, or they're only offering their services to Korean investors. But since then, since that original clampdown, they've been really open and really happy about having crypto as a part of the offerings to the general public out here. It's looked at in a more positive light, I would say, than it is in other parts of the world.
I see. What kind of future for crypto do you see in the U.S. and other countries other than Korea, with the endless attacks by prominent politicians, bank CEOs, and the SEC?
That is an ongoing battle. One that I actually hope will work itself out in a positive way for everyone. I would say there's a great extent, we really do need some regulation. We definitely saw that over the last year of what happened with several different things, such as the FTX situation, the Luna situation, Celsius. So hopefully things will work themselves out. But then again, for what's happening right now, I kind of expect it to get a little bit worse before it gets better. There are a great deal of clampdowns going on, especially in the US. Even for us right now in our fund, we are not able to easily onboard US clients. There's a whole process to go through for that. And we're putting things together so that we can make that a bit easier. But they have really made it much harder. So even for US citizens, with the current situation, they're not able to trade leverage or futures. So it really, has changed things just in the last year. But hopefully, will improve.
Mm-hmm. So tell us what happened during the Terra Luna algorithmic stablecoin, collapse a year ago, and how did your fund navigate that blow up?
That was actually such an interesting one. I mean, I had never been through a stablecoin depeg of my own for the first time. So what happened in a nutshell was that there was basically a stablecoin that was created that was an algorithmic stablecoin. And I think long-term, we've heard that there hasn't been any success in algorithmic stablecoins that have been created. They've all had their own issues. But this one was basically based off of the other Luna token, the sister token, that if the stablecoin was to depeg, you could buy up Luna and basically capture an arbitrage between the two. So you'd buy $1 worth of Luna, but then you'd be paid back in the stablecoin, so you'd actually make a little profit. That kind of all fell apart. Fell apart basically because, as everyone thought, there was enough funds being held to hold this structure together. They weren't put out quickly enough. They weren't put out 100%, and so it really saw deeper and deeper depeg from its peg, from its original intended value. At that time, we were spread across several different stable coins as well. I mean, USDT, UST, and USDC, a little bit in DAI as well. And we also hold fiat, keep that as a collateral on some exchanges. But we were holding some of the USDT, took a nice little hit that month. But the good thing was it offered so many other opportunities to trade different types of arbitrage between cross exchange and funding arbitrage that was just paying great amounts of funding rates at that time. And so that month we were able to turn a nice profit, even after coming away with that initial small loss. It was definitely one of the most interesting situations I've ever experienced. I also traded crude oil the day that went negative, and I have to put that up there on my top 3 days of wild trade that I've ever seen. But in the end, hopefully we can not have a situation like that happen again in crypto, because once that Luna and UST coin just plummeted, the entire market just, it was dominoes falling one after another. After that, we had Celsius and then FTX. So again, it really is a situation that hopefully doesn't happen again.
Mm-hmm. In your fund prospectus, you are said that, quote, we exploit market inefficiencies and market structure that only exist in crypto. How do you exploit market inefficiencies, especially these days?
Yeah, that is not as prevalent as it was years back when crypto first started. They were, just such good percentages to be made, but there still are a great deal of inefficiencies due to the fact that there are so many different types of coins, just that the constant making of new coins and being listed on different exchanges. And the fact that, yeah, there are so many different exchanges to be traded on creates just all kinds of arbitrage situations where one specific coin may be trading at a completely different price from something else. So similar to this kimchi premium, it may be that kind of a situation, not as great, not as much as a 30% difference, but it still creates a nice arbitrage opportunity. Even things like Bitcoin will be off priced. Beyond that, we have the futures, perpetuals, along with the quarterlies. Those are really great for just adding another element to the mix, where you can trade against the spot market, the futures, and then just go cross exchange. So it really opens things up a great deal. And I'd say that one of the biggest things in the traditional markets, we have indexes. So something like the NQ is an index of many different stocks. But in crypto, there really aren't indexes. It's just you're either trading Bitcoin or ETH or XRP or something like that. And you're trading that as a future in itself. So you can trade these different things as a statistical arbitrage as well. That's one of our other trades that we do. So by putting these two things together as pairs, it creates in itself a whole nother kind of a trade.
So describe, are you able to do these arbitrages just through the centralized exchanges, or do you also involve DeFi? And what types of common current coin pairs do you look at when you arbitrage? Give us a breakdown of what typically frequently happens.
Yeah. So we specifically stay out of DeFi. Now, there are a lot of opportunities there. There's a site, DYDX. It's great for using futures contracts. They do not offer spot, but I think they're going to in the near future. But again, we stay away from DeFi because what we offer to our clients is basically just centralized exchange trade to keep a little bit safer, to reduce risk of just basically contract hacks. And beyond that, we try to trade highly correlated futures contracts if we do something like two futures contracts over each other instead of something like a spot contract versus a futures. One pair might be the obvious BTC ETH. Another would be the BTC Litecoin pair. It's also good, has a good amount of daily volume to go through. And it's really key in getting in and out of trades correctly in doing these spreads because, it moves just a tiny bit away from you. And if you have one leg on and the other still off, the trade's gone and now you're lost. So basically these high volume markets are really key for us. That's one of the biggest factors we really look for when we try to create these different pairs.
Mm-hmm. How long are you typically in each type of trade? I mean, does it typically last seconds, minutes, hours? And are you in and out frequently of the same pair multiple times per day, or is it highly dependent on the liquidity flowing in and out of the market? So low liquidity environments would be drastically different than a high liquidity market?
Yeah, one large factor there is not just the liquidity, but the two-way order flow that's coming in. And for the fact that each trade that goes through the market is such small notional value, we look to take these trades at a little bit more of a midterm. So we may be looking for 5-minute to 30-minute trades, but below that, it's just so small that you're not able to really get on any decent size and make much out of it. So at times when we're trying to really, push larger size and make something out of the trades that we're getting on in these statistical arbitrage trades, we may look towards trading for an hour up to a day, or even a little bit longer than that. But ideally, we knock it down within less than a day.
How has the performance of your funds varied, both in the bull markets and in the current kind of bear market to sideways moving market?
Well, our track record goes back 3 years, and definitely in these large bull runs, we have had some really great returns. I think most of the funds have all seen that. But the fact that we run these two different strategies, the market neutral strategy and our long short momentum strategy, we have also done decently well. Not trying to brag, but we've done okay in the downturn of the market. So we were able to pull a profit out and make a return for investors. But I would say at the same time, it is much easier to make more money when things are basically just going up. To the upside, things can be infinite. But on the downside, at most, you're really just going to make 100% of where you sold from the top if it goes completely to zero, unless you're using leverage. And for our long short fund, we actually stay away from leverage and we look to trade only using leverage on exchange and keep funds off the exchange. So we look to diversify across several exchanges, say 4 exchanges, only put on about 5% of funds into said exchange, and then use that with a little bit of leverage to basically have the full AUM be put to work into a trade. But then again, on the market neutral side, we'll use a little bit more leverage there. Again, we look to make small profits at times when things are a little bit shaky and we feel like, the market can really kind of fall even farther from here or really just split apart, kind of like the Luna situation did. And we may pull a lot of our funds off exchange. That's, again, what we did in the FTX situation. Most of the funds were completely off exchange and then trading, trying to make what money we could, using just a bit of leverage with the little amount that we had left on until that thing kind of went belly up itself. But yeah, definitely in the bull markets, I think everybody sees a lot more of a run up in their P&L.
Mm-hmm. If you were not able to find these arbitrage opportunities in crypto, would you still be a trader of crypto or a buy and hold investor in crypto?
Really, if the arbitrage opportunities were just, suddenly gone tomorrow, basically, if they had traded like how regulators have the Korean markets trade out here, where you really can't short something and, it's all basically on one single exchange, it would make it so much harder to where, arbitrage is basically out of the picture. I don't think I would actually be a buy and hold kind of a trader still. I would like to do a bit more of what our fund does, which is the long short. But then again, if I wasn't able to short, I'd just be on the long side, but it would be a lot more short term. So I guess in another way of saying, do I have a view that, crypto is going to moon from here and it's only going up? I really hate being a directional trader myself. Mm-hmm. I really stay away from directional trades as much as possible. The few times I've taken them, just take a punt here or there, it's never gone well for me. And so I'm either very, very short term or just try to, take trades that are basically arbitrage centric and, keep me basically, grinding away at small profits day after day.
Excuse the last interruption here. This is Tessa. We hope you're enjoying this episode so far. If you love the podcast, please give Chat with Traders the best review you can on whatever platform you're listening from. This will help us to keep the episodes coming. Also, if you haven't subscribed to our email list, please hop on to chatwithtraders.com and click on subscribe so we can keep you posted of information that may be of importance. Thank you. Now back to the chat with our guest.
Mm-hmm. Have you or can you use crypto for any kind of payments for goods or services in Korea?
There's a few that do allow it, but it's a little bit more like kind of the PayPal system out here and how that works, which most retailers do not offer PayPal, or most websites don't connect to it. They have a different system that's their Kakao banking. And I think Kakao is getting more into offering crypto, but right now it's still in the beginning stages. So basically, if you really want to use crypto for any kind of purchases, you sell off the current crypto that you have to buy more crypto on the exchange. So I think the use case is a little bit lacking still, but it might be getting there sometime soon.
I'd like to transition to psychology. You've mentioned in the past that psychology is wildly overused in trading. Could you expand on that?
Yeah, I kind of getting into markets and studying and learning different strategies. Constantly, psychology comes up, left and right. And if you're trading this pattern and it's not working for you, it's worked for so many others. It must be your psychology. I've really seen it moreover where other educators have been teaching and training certain methods that really have no edge to them in any form at all. And without having a real edge, say as something as simple as an arbitrage, where you're just buying one thing at one price and being able to sell another thing that's equal at a higher price, and just buying low, selling high. If you're able to trade an actual strategy that has edge and you can see it play out right in front of you and in the markets, then a lot of this psychology just, goes to the wall. It's unnecessary. As long as you can execute as best you can and you're able to do that and consistently and profitably, you can easily continue on. But when a strategy is kind of up in the air and will it work today or will it not, then going back to, oh, well, if it's not working, it's, you cut the trade too early, or you should have done this. And why did you do that? It's because you were nervous in that situation. It's a lot easier to say, okay, I bought this token, let's say, at 12. I wanted to sell at 14 on the other exchange, but the price moved away from me. So what did I do? I had to just sell back, and I sold it at 10. Too bad. Okay, on to the next trade. Was that my psychology there that helped me just take the loss? Or was it just the fact that statistically, this loss will happen this often because you're not always able to make 100% of your trades, so you have to cut it?
So in your view, is it that the lack of a proper strategy leads us to psychological vulnerabilities?
Yes, and also believing that you have vulnerable traits towards over trading or not taking losses because you're really just lacking a general strategy. And I think a lot of the educators out there, again, they'll teach different strategies that it's just hard to say, does it actually work or does it not? And then harp back on, oh, okay, if it's not working for you, here's a different reason, which is it's your psychology, it's you inside. And sometimes people can't cut trades. And yes, that can be an issue. But when you have a strategy that does work and you still find yourself messing about and screwing that up, you can easily point to, okay, yeah, I need to cut this out.
Well, the people who adhere to the psychology argument, many of them present the point of view that when you're creating your strategy, you're in a calm mood, right? You're everything's fine, right? Because you're not risking anything at that point. And then once you take on the trade, then your own inner demons that you didn't even know were there come to the forefront. And therefore, psychology is the most important part of trading because it will likely overrule your strategy. And then you'll be caught up in loops of rationalizing, why you added to that position, why you're going to hold on, and so forth. Because often what we don't know that lurks inside of us can be our own worst enemy. Have you been fortunate enough not to been too affected by psychological trading issues that so many other traders face?
That's a great point, and I completely agree. If you're in situations where you create the trade and you have the strategy and the way that you want to trade things, you have the plan, you go to execute, and then, oh no, you're doing something completely out of what you had planned to in the first place. What's going on? Why can't you just, take the loss here? Or why did you move your stop? Something like this. Yeah, that definitely gets to people. And I would say the biggest help for getting away from that kind of behavior is trading a higher frequency type of strategy. When you're doing something where you take one or two trades a day, and everything is banking on the next trade, you're a lot more likely to have that come into play and have that devil on the shoulder kind of tell you, oh, just let this one ride. You know, it's the right thing to do. But really, if you're trading at a higher frequency rate where you're taking 20, 50, 100 trades or more in a day, you just know statistically it works out over time. Just take the loss on this one, get out. And for my own psychology, yeah, I could see how I had issues at some points where I should cut this trade right now. It might come back a couple of ticks. And those kinds of things I can remember one trade in the NQ where I let the trade go for 37 seconds. 37 seconds of a trade. I should have been out in a second or two at most. And I go back and I review it and I'm like, this is terrible. And even right after that, I took the next week off and had to reevaluate my life over a 37-second trade. But again, when you have higher frequency types of trades that you're taking, you just have so much more experience in a shorter amount of time, and you don't let one single trade really get to you.
Mm-hmm. Good point, right? So exercise your psychology through frequent trades.
Absolutely.
Yeah. What's your view on scalping? I hear your viewpoint, it's highly overused in trading.
Okay. The term scalping, highly overused, without a doubt. Actual scalping by the bots that are out there is going on. It's just a constant rate. But I would say, scalping really came from and originated from the floors and floor trading, where you're basically just crossing the spread. You're buying on the bid, selling on the offer. You're making a tick. You're pulling a tick out of the markets. Now there's different videos online that you'd see and I'm just in this trade for a quick 30-minute scalp today. Look at I bought here and oil went up, half a buck. Made a good amount of money. And it's just a huge difference of what the original term really meant. Again, I can say something where, all right, the best bid, best offer has a bit of a gap between it, and you're buying basically on the bid and you're trying to sell near the offer. It might be a scalp too, but again, scalping, even in that situation, is just more of a time thing. And you're really looking to trade a couple of seconds at most. You're hoping to be turned out right away from that trade. So what scalping would really mean to me is very, very fast, maybe high frequency, and really just trying to collect the smallest amount of money between the spread that you can in the moment while it's there.
Mm-hmm. Good. So to wrap things up, what do you struggle with most in trading or running your fund?
Well, without a doubt, after the markets have really just plummeted, there has been less of an interest in crypto overall. I think you may have heard of this new fad. Maybe it's a fad. AI. Everything is just AI centric. A lot of people even coming to us saying, do you run AI algorithms? And we use AI for research. We'll have an idea for a strategy that we're creating and use a little bit of AI to see if it might be better, changing different factors, but we note those factors. Again, what we really would struggle with these days is just building back a little bit more interest into the crypto markets. I think it was just so easy to build AUM for any fund during the big, up run. And in the last year, we won some awards. We've done okay, but I think everyone overall is just finding it hard to really bring the interest back.
Mm-hmm.
So hopefully, we'll have a opposite Luna, a reverse Luna, where things go up, not down.
Curious, do you view the expansion of the federal deficit and the endless money printing that will be coming soon as a positive catalyst for crypto? I mean, overall, fiat currencies around the world are debasing. at a continuing rate. Is that a positive for the long-term viewpoint of crypto?
I think a lot of people do have it as a longer term basis for, I mean, look at Sailor, Bitcoin's, going to $1 million because everything else is going to absolute zero. The two things need each other without a doubt. I mean, if we only have fiat to base everything off of in life, then, it's just, it won't be good long term. But at the same time, if there's only crypto to really go around out there, again, that wouldn't be ideal. Will it really make a big difference? I think it will make a big difference slowly over time. Again, you're calling me out on more of a, almost what I would say is a directional call in the markets, where I just like to stay neutral. But I would say probably it will have an effect.
Mm-hmm. So do you have any goals for yourself or for your fund?
Just generally keep up with making returns and, doing the daily grind. We have some strategies that we're working on that we're really excited about. So it's basically every day go back to, the results and check the stats and see how we can improve things. Again, trying to develop into other areas. So we're based out of, I myself, Korea. Our quant is out in the London area. He's great. He's a superstar himself. And our head is out of Australia. So a lot of our client base is out of Australia. We're looking to go into Dubai a little bit more. They have a very crypto-friendly and positive outlook on things there. So yeah, just kind of getting the word out and seeing how things go over the next year.
Fantastic. How can our listeners get in touch with you?
I know I'm not too active on the social media, but I think Twitter would be number one. Very, very small little Twitter account that I have just for messing around with, just looking at basically memes. But that's Andres Trades. And then my LinkedIn would be the next best. And you could find me there under Andres Granger.
Oh, fantastic. Andres, thank you for coming on Chat with Traders.
Hey, thank you so much. It's been a lot of fun.
Stay with us for a quick update.
Quite some dramatic events have been happening just in the last week. And I feel it's necessary we have another update to what's been going on in the crypto sphere. When we were interviewing you just a couple weeks earlier, the situation seemed somewhat stable but sleepy. Can you enlighten us? What's been going on in the crypto sector with Coinbase, Binance, and the SEC?
Yeah, well, things have stabilized a bit, just a bit in the last few days, but still a lot of FUD out there in the markets, as they say. Well, so the SEC sued Binance and Coinbase and really had some pretty damning evidence on Binance. So they're kind of going through that process right now. Basically, a lot happened because of that. So there was some larger funds that decided to liquidate some of their holdings because of all of the listings that the SEC put out, calling many of these tokens, these crypto coins, basically securities. So there were some funds that decided to exit their positions, their long-term positions. One notably being $2 billion position overall. So that was pretty big in the news on Friday night, late Friday night. When they were actually exiting this, they gave off some of the orders to be executed to other market makers, and also these markets currently having very little liquidity and kind of no bid side offer due to the news. Things just kind of dropped, and it was a real, snowballing effect.
So is this part of the, you sent me a graphic earlier showing some firm had some cascade
trading for you, then it will kind of see this thing happening as it's happening. And you'd be a little bit luckier, but I think for the general investor, it's kind of hard to avoid. they do happen quite quickly. And mostly, once it does, it's kind of, you have to decide, are you really willing to hold this position and sit through what's going to happen, or get rid of it? And I think the bigger thing here was people had heard about the SEC lawsuits coming in, first to Binance, then right after that, Coinbase. And so we all kind of see this as a situation where, prices are just going to go lower because of this situation happening. And funny enough, they did.
So in your opinion, do you think the SEC will be able to mostly, if not entirely, cut off Americans from getting into or out of crypto? What's stopping them from suing all centralized exchanges all around the world? I've heard that they even want to go after Binance worldwide. Are there any safe places?
So the Binance company itself, they really are going after the CEO and the larger company as a whole. A big part of it is the Binance US. A lot of liquidity has been pulled from there. But as for other exchanges, there's a lot of talk in the news about going after just about every other exchange that's out there. And that just could be a possibility. But then again, there's also some pushback from the market overall. I know there was just news the other day about taking Gary Gensler out and, firing him from the FCC. So still, a lot of this is speculation. It's kind of the early days of this situation. So we'll see how it plays out. But number one is getting a little bit more liquidity back in the markets and having things trade in a little bit more of a proper fashion.
Do you see any changes on the Korean exchanges or the other governments' response to the SEC crackdown? Are they closing up more? Are they following in the SEC's footsteps, or how are they responding to this?
Yeah, from everything that I've seen out there, there's not a big response in others following in the SEC's footsteps. They are looking at it like it's kind of an overstep. They kind of didn't need to go this far. Again, they're really going after Binance for the things that it's doing, telling US users to use a VPN. That was actually in their US site, so they could access the major Binance network and trade off of the real liquidity that's over there, not just the Binance US entity, but really calling these other tokens, coins, assets. That's really, the market didn't really like that. Again, they're still happy to be using it. Places like Hong Kong have just opened up, developed a really good crypto hub out there. So it's not all gone.
So how have these events affected liquidity and the delta neutral arbitrage opportunities that you use?
Yeah, so liquidity has really dipped down. It was not that long ago that basically Jump Capital and Jane Street pulled out of the markets and took their liquidity, almost everything, off of Binance US, kind of foreseeing this kind of event coming. And from there, a lot of other market makers have really pulled out. So across the board, everyone's just noting how thin markets are. Yet volume has actually decreased a great deal. So you're not seeing massive moves or something that would have really moved the market if we had the kinds of volume we saw in the last year. So things are just kind of down across the board. As for arbitrage opportunities, there's still those market makers on the front lines, running their bots with even small size, but still just holding these thin little markets together. So things have kept up. As for arbitrage, it's not that big right now. I mean, how can I really put this? Yes, the weekend events really did create some interesting situations, and especially, most notably, on the Binance US exchange. Other than that, things have held up pretty well with this very, very illiquid volume that's in the markets right now.
So your operations and what you do, you're still able to do them, but not as frequently or with as much profit potential as you had months ago?
As for the neutral side, we are not able to get off the size that we had in the last year as much, which isn't that bad of a thing. Still, the opportunities are there, and they're seemingly coming just every single week. There's another arbitrage that's happening one way or another, whether it be funding or whether it be cross exchange. But what actually did work out really well for us this last week, we decided to pull a lot of our trading from exchanges, like many other funds did. I think just about everyone in this industry has gotten to the point where as soon as you hear about these kinds of things, you pull the money, ask questions later. So we were very light in our involvement, but our other fund, the long short fund or the trend following, that performed really well. I have a little graph of that, and we post up on Twitter, so I'll send that over to you guys. Maybe you want to include that in the show notes. But it was really being positioned early before this to the downside and being able to ride out this kind of situation that came along from these lawsuits.
Andres, thank you for coming on Chat with Traders.
Thanks again, guys. Thanks. Good talking with you.
Yes.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Trading in the financial markets involves a risk of loss. Podcast episodes and other content produced by Chat with Traders are for informational or educational purposes only and do not constitute trading or investment recommendations or advice.
Sounds good. I don't listen to
This is episode 264. I'm Tessa, co-host of Chat with Traders. We have a different episode today apart from our regular programming, so we will continue with our regular programming in the upcoming episode. Do you think trading contests are not a big deal? For this trader, he didn't think so either, at first. His name is Gabriel Bulo, and he's the first place winner of the 21-day trading challenge contest that we hosted in partnership with Trade the Pool a couple of months ago back in mid-May inside the Chat with Traders community. Before we get to Ian Cox's interview with Gabriel, I wanted to explain a little bit about this contest. About 450 traders participated, and around 50 of them ended up positive at the end of 21 days. In this contest, if you lost $2,000 in one day, you couldn't trade anymore for that day. And if your total drawdown reached $20,000, you were out of the game. The account size was $200,000. Participants could trade U.S. stocks and could also short sell. After 21 days, the top 10 winners with the best results received prizes, including evaluation accounts of different sizes from Trade the Pool. We chose to run the contest for 21 days because if it was shorter, someone could get lucky and win without a real strategy. On the other hand, if it was too short, someone could be eliminated too quickly due to a big loss, even if they knew how to trade and recover given more time. A lot of the feedback we received from the contestants, even from those who were eliminated early on, mentioned that they learned a great deal from the experience, pushing them outside their comfort zone. Let me give you an example. Several Forex traders participating in the contest had never traded U.S. stocks before, but this experience gave them the confidence to consider it. Other feedback highlighted the pressure to perform in the contest, which brought a new dynamic to their trading. For some, it helped them understand what it's like to trade with a larger account size, requiring a different mindset compared to trading with a smaller account. I could keep going, but I'll stop here. We've archived 2 recordings of the contest recaps and pre-market analysis related to the contest for members inside the Chat with Traders community. If you're interested in having access to those, just join us inside the community and reach out to me. Or if you have any questions about the community, just get on the Chat with Traders website and contact us. Please note, Trade the Pool is currently one of the sponsors for Chat with Traders, and although we partnered with them for the contest event, we do not endorse any prop trading firms. Now let's get straight to the interview to learn a little bit more about our contest winner, Gabriel Bulow.
Well, Gabriel, welcome to Chat with Traders.
Hi, Tessa. Hi, Ian. Nice to meet you.
Share with us a little bit about your early background, kind of where are you now and where did you grow up?
Okay, I'm from Philippines and I am currently in Australia right now because my wife wants to pursue culinary. So we just moved here recently. But before that, I have worked in Dubai for 6 years. That's why my flag in the competition was in UAE. I'm an accounting graduate, but I never used it. And I even forget all about it because I've been working in sales for too long. Now I'm just a normal guy who works his 9 to 5 job and to earn some money and pay bills.
How old were you when you first got interested in the financial markets?
It was 2020, pandemic came. Then one of my classmates in college who is in the insurance company, she posted pictures on Facebook that the prices of the blue chips companies are dipping down. So she said it's the best time to buy insurance because the prices are low. So me, I didn't bought the insurance. So I went to YouTube and searched on how to buy shares of stocks in the Philippines. So that was my first encounter with the market.
So this is back right as COVID is unfolding and the markets are taking a big dive. And you approached the markets initially from a kind of a more of a buy and hold long-term investor?
Yeah, it is. But it just took only 1 year. It was supposed to be like that, but it's supposed to be like 5 years, but my mental capacity is shaking when it dips down again. So I remove all my positions.
Oh, I see. So you sold out of your buy and hold type positions that you had.
Yes, exactly.
I see, because you were presumably wanted to take some profits or at least avoid losing some of the gains. Yeah. So did you have another area that you wanted to go into? Did you just say, hey, I've gotten some profits, I'm good enough, let me just pull out and I don't need to, interact with the financial markets much anymore? Or did you have a different area that you wanted to go into?
No, the thing is, the reason why I became a trader, it's because of that. When I bought it from, it was 2.8. The stock was in 2.8 and it shot up to 19. So I didn't sold it. Well, that's the problem. So it went in, when it crashes to 7 in just 1 month, I sold it and it damaged my mental capacity. So I decided to become a trader to know what happened or what did I do wrong, because I should have gained a lot.
I see. So that the catalyst, the volatility in your long-term holdings actually was a catalyst to get you into trading.
Yes, it is.
I see. And did you have any kind of early strategies that you focused in on early on? What were you influenced by, like fundamentals? Technicals, like kind of what type of technicals?
I was using before when I was studying MA bounces, like, and RSI range trade. I also using divergences, and I was like hopping strategies again and again, which is normal for a beginner to do.
Mm-hmm. And you were just in equities on the U.S. markets?
Before I was in Philippine stock market, then I ventured to US market, and I trade like cryptos, anything like commodities, but there's no luck with it.
I see. So you traded a variety of instruments, and like what would be the catalyst to get you into a trade? Like what were you looking for to buy, and what were you looking for to sell?
When it bounces to like 50 MA and it breaks out, I started buying, but it's the other way around, because it's like I'm buying when it's in a downtrend. So it should be like a short, a short sell should be. And I'm not having any stop loss before.
So this early trading, where you say you didn't have a stop loss, what did you experience during that time?
I was devastated, because if I cut my losses, it's too late already, and it will damage my psychology also. And I blew a lot of accounts already.
So you got caught in the often too familiar trap that so many investors or so many traders experience by holding on to your losers, because the pain of getting out of that position was greater than the pain of holding on to it.
Yes, it is, and much more the, what do they call this one, the leverage. Because if you're trading the Philippines, there's no leverage. When I went to U.S. stock market, there is a leverage like 6 times your equity. I just blew out a lot of accounts, and I still remember I was always like crying in my bed. Like,
Oh, wow.
it's too bad for me, for my mental health also.
So just curious. So in 2021, you started trading, and how long was this period of not having stop losses, buying the dip and holding on and seeing your accounts blow up?
It will be just a year. It was in 2021. So when I got a lot of experience going up accounts, so I was much disciplined now than before. And whenever I take a trade, I have my stop loss already.
So when you were blowing up your accounts, how did you get back in the game? Did you just save up money from your jobs and open up another trading account?
Yes, I'm always depositing my money into the brokers. Then I start trading again, because I know in myself that I can do this, and there's no turning back.
So despite blowing up your accounts, you had the determination and the confidence that someday you will get this. And is that accurate?
Yes, it is. Yes.
I see. And so during this process of turning yourself around, did you read any books? Did you watch videos? How did you educate yourself?
Okay, I bought a course in the Philippines, and I learned the strategies, the psychology, and this was after I blew a lot of accounts. So in that course, I learned a lot with my trading, my strategies.
Share with us a little bit about what you learned.
Putting stop loss, the structure, the trend, the support and resistance, which is very important. The risk management, which is also very important.
Elaborate a little bit on, you mentioned there was no turning back.
Yeah,
Tell us a little bit more about that.
Yeah, the thing is, I have a dream before that to become an accountant, but it was like shattered, because in the Philippines you have lesser salary. So I went to UAE to work in sales. so that I will have a lot of income. But the thing is, the position is not there. So I was planning to have better career, like to become a trader, which is very possible if you are going to be a lot more confidence in your trading, and if you have a lot of dedication.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including zero commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
Did you have any kind of role models that you looked at, or did you know anyone in the trading sphere? Any friends, family that did this?
No, I don't have any connection with the like financial markets or anything. Just by watching YouTube, like Warrior Trading or like Mid Barak. That was my like my mentors.
I see. Mentors. Did you have contact
Teachers,
with
sorry
them?
about that.
Oh, your teachers. I see. I see. Well, speaking of mentors, did you have anyone, or did you know anyone in the trading community that you were able to talk with and or hold you accountable?
No, nothing at all. It's just me in the market.
So as you take this course and you start implementing the things that you're learning from this, describe to us a little bit about what changed in your trading.
The mistakes that I've got been trading, like if the candles doesn't close above, I will not take the trade. The discipline in the candles, the discipline in your risk management, like risk only 1% per trade. The psychology within every trade, with once every trade, you need to journal everything.
So you're keeping track of each trade you make and why you make it, right?
Yes, it is.
And so you established a discipline around both getting in and out of trades when they cross certain technical indicators, certain moving averages. Is that could you break that down a little bit more?
Actually, right now, I am not using any indicators anymore. Just price action. My charts are very clean, so because if I'm gonna be using indicators, it's lagging indicators. So I focus much on the price action.
What made you move away from using technical indicators to just price action?
It's because of my experiences that we have some strategies which is only for per candlesticks. Like there will be some range with the candlesticks. If it breaks out, I will start buying. And if I use some indicators, it will give me some false alarms, something like that.
So you got a lot of false alarms in the past using the various indicators?
Yeah, like the MAs, if it's breaking, then I start buying, it breaks down again. So it was kind of depressing.
Hmm. And how did you select the kind of stocks that you wanted to trade? I mean, where did you find them?
I have parameters on my every trade, and if you talk about the competition, I'm using two strategies in my competition. In the competition, it should be gapping stocks because gaps indicate strength.
We'll get to the competition in just a moment.
Okay.
That back when you're trading, so you traded for how long did you trade using technical indicators?
I would say I was trading focus in like for 2 years. The investing was like 3 years ago.
So when was it that you transitioned away from moving from using indicators to just price action? And the inspiration to do so was from your group?
It's my own decision to not use them. I was started using without any indicators last year because if gonna use any indicators, it screw up my parameters.
Go into a little more detail when you say you just use price action. So what do you give us a typical example of how you find the particular stock that you want to trade? And are you trading day trade or are you swing trading?
I'm day trading and I'm also swing trading with another account. Yeah, my strategies are like consolidation breakouts or breakdowns, sometimes flags or some head and shoulders.
Okay. So when you say, for example, consolidation breakout, so what does it look like on the chart? During what time period? What are you looking for?
I'm looking at the first minutes of opening of the market, like 3 to 4 candles consolidating in a range. So once it breaks out, I'm started buying.
Okay, 3 to 4 candle. What time frame are you using?
1 minute.
Okay, interesting. And so do you hold your positions overnight, or is this just in and out same day? You did mention about some swing trading as well.
On my personal account, I was using only 1:1, so I'm trading like for 10 to 15 minutes per day.
10 to 15 minutes. That's the time that you're trading per day, or you're using a 10 or 15 minute chart.
No, I'm using 1 minute, and I finish my trading in just 10 to 15 minutes.
So how is that? How are you able to trade for such a short period of time? What kind of metrics are you looking at to get in and get out?
Yeah, it's just 1:1 ratio, and I'm good. I'm good for the day.
Oh, 1-for-1. So you risk $1 and your target is $1 profit. Is that?
Yes, it is. Yes.
I see.
Mm-hmm.
Great. Let's move into the trading contest. You were, first of all, congratulations on being first place winner of the Chat with Traders community 21-day trading contest that we put on with Trade the Pool back in May.
Mm-hmm. Thank you so much for that.
Yeah. What motivated you to join the trading contest?
The thing was, I have only small account, which is I had the Trade the Pool. It's only 20K. So the motivation was to win the contest so that I can get the 260 account. So I started planning and what my risks are, my stocks are to trade.
Oh, wait. So to be clear, are you saying that you had already been trading a $20,000 account with Trade the Pool? Is that correct?
Yes, but it's an evaluation still.
Okay. So so you were going through the process of a $20,000 evaluation account.
Exactly.
And if I understand correctly, if you passed that $20,000 valuation account, then you would be given $20,000 house money to trade.
Mm-hmm.
Is that accurate?
Yes, it is. Yes, that's accurate.
I see. So you joined the trading contest so that you would have a shot at winning the $200 and $50,000 account. That was your kind of motivation for joining.
Yes, because for me, the 20K account is too small for me. So I've tried to win this thing. So I got it. I won the competition.
Wow, good for you. So take us through the journey, this 21-day journey of this trading contest, and what was it like? Each week that you were in there, and what did you do? Like kind of your strategies and what you traded.
I used two different strategies in the competition. First was I was trading gapping stocks, because gap indicates strength. But before all of that, I have some parameters on picking my stocks, which is for me, this is very important. So there's parameters on each stocks. It should be in an uptrend or in a downtrend, and it should be in mid caps or big caps that moves 10% to 20% a day. So penny stock is a big no for me. It's a big no because it will eat a lot of commission. And lastly, it should be gapping. So the strategy is this: in the first week, in the first 5 to 10 minutes after the market opens, the stock will create range. After creating the range, there will be high and lows. If it breaks out to the highs, I will start buying. Then if it goes to back and retest, I will buy again. And if it breaks out again, I will buy again. My stop loss will be under the lows. So the TP is only 1:1. In just 10 to 15 minutes, I'm done trading.
I see. You're done trading for this contest and for your personal account, or are there differences?
It's the same as the personal account.
Got it.
Yeah, but in the first 4 days, it's not working at all. It resulted in almost like 8K drawdown in the first week.
Why do you think that is? Like, reflecting back, what was it that caused this big drawdown? Had you used this strategy before?
Yes, I did. The problem was I was counter trading, like the stock is moving higher, but I'm still keep on. So I realized I need to change my strategies from gap and go strategy to buy on support and short on resistance strategy.
I see. And so this new strategy that you're transitioning to, had you used that strategy in your personal account prior to the contest?
Yeah, that's one of my playbook. So I changed to that strategy, but that strategy has 1:3, 1:4 ratio.
Okay, so you increased your risk reward ratio from 1:1 to 3:1 or 4:1?
Yes, it is. Yes.
I see. So you're trying to let your winners run rather than just selling out.
Yes. So at the second week, the bad part was I made an objective that I won't sell unless or until the platform will close it by himself. So there was no taking profits. So I have 4 days of drawdown. So on that Friday, I shorted the banks. I short near in the resistance, and in just 15 minutes, I was in positive 20K, but I didn't close the trade.
Well, aren't the rules of the trading contest, isn't it just day trading? Aren't you supposed to close your trade by the end of the day?
Yes. I was using the platform automatic sell. So
I see. So you were holding on to the trade, and then you just allowed the system to automatically sell you out by the close of the day. Is that accurate?
Yes, it's accurate.
Oh, okay. Okay, great. So were you long or short the banks?
I shorted the banks, which is the PACW, which is from 8K drawdown, and I was in after like 15 minutes. I was in 20K, positive 20K, but I didn't close a trade on that gains.
Were most of your gains as a result of shorting these banks, which had a big drop?
Yes, it is. That's one of the reasons.
So was it actually a strategy of yours to let the system close you out, or did you what was your thinking around that?
That's my objective, because if I will sell too early, especially for volatile stocks that runs 10% to 20%, there's a less for me. There is, because I backtest it a lot. And if I hold into that positions, there's a big possibility that it will go up more.
I see. So was it a way of kind of not sabotaging your own trade by getting out too early, but rather just hold your winners and then let the system close you out automatically?
Yes.
So when you're selecting the stocks to trade, are you looking at the big movers of the day in the first 5 to 10 minutes, the big gap ups and gap downs, and you look at the stocks making the biggest moves? Is that accurate? And then you trade those?
I was trading the same stocks the same week, because if I move to another stock, the problem is the other stock that you left will move much higher. That's why I'm sticking with my. If I have like 4 watch lists for this week, I will trade it like in the whole week.
Okay, so are you saying that you're concentrating your attention on a few select stocks in your watch list and trade them long and short because you get to know them?
Yes, you need to know the stocks, how it moves, and what is it going to do.
Mm-hmm. So then did you discover this during the trading contest, or was this one of your many strategies that you've acquired over the year?
On my day trading, I have only 2 strategies, which is that gapping up and the buy and support, and the sell and resistance. So that's the only 2 in my arsenal.
So as far as concentrating your attention on a few select stocks for the week rather than jumping from one stock to another stock that you hadn't been following, did you find that this is helpful, and you continue to use this idea of concentrating attention on a few select stocks during the week?
Yes, it really helps me. As my experience, if there will be an exhaustion, there will be big move after.
Mm-hmm. Describe that, when there's an exhaustion.
It's like there will be a pause in the daily. There will be a pause in the daily, and once it breaks out in like 1 hour time frame, it will moves much higher.
So you're looking at this both on a daily chart and a 1-minute chart, or?
Yes, one day of one day time frame and 1 minute.
Okay, so you're looking to trade. Like, give us an example of a stock that fits this parameter, and what you're looking at. To describe to us, what is that like?
It's like AI.
Okay. Mm-hmm.
Yeah. And if it nears the resistance, and if it cannot go through, I'm shorting it.
Okay, so you're saying that if it can't break through the first level of resistance after the pop, then you're shorting it?
Yes, I'm shorting it.
I see. So you're shorting a stock that hasn't yet broke down, but has failed to break out to new highs, and that it's consolidating. Is that accurate?
Yeah, and first, it's like this. It has a big move in the first day. Second day, it has a pause. It doesn't have any highs or new highs. Then at the third day, it will break down.
Okay, so you're looking to short overextended stocks for looking for a retracement of part of that gain that it made a couple days earlier.